Welcome to Breaking Banks.
While companies were preparing for a snow day, what they got instead was an ice age. I don't know a single financial institution or fintech that's business continuity plan anticipated the full scope of the pandemic. With so much uncertainty in the world, how can an organization even begin to prepare for the next set of hurdles that 2020 will surely throw their way? Enter Lindsay Davis's Pandemic Playbook. This guide addresses these operational pain points and provides the navigational framework that so many leaders need in order to find their path forward. You're probably familiar with Lindsay's work, if not her name. She was the senior intelligence analyst at CB Insights covering fintech and writing phenomenal work. And now she is director of insights for Caliber Corporate Advisors. In the second half, I'm joined by someone that has helped many financial institutions get out of the Stone Age. Amy Radin is a trailblazer in the financial services industry, serving as one of the first innovation leaders across several of the largest players in financial services, including being Citibank's first chief innovation officer. She packs all of this knowledge and experience into the Changemakers Playbook, how to seek, seed, and scale innovation in any company. Amy's playbook has everything you need to break down the barriers between your organizations today and a modern foundation for tomorrow. Lindsay, thanks so much for joining JP and I today to talk about the Pandemic Playbook. The playbook is a fantastic, playbook for lack of a better word. At what point did you start writing this? Because it is thorough and it is lengthy, and to have a COVID playbook out already, to deal with a pandemic, was it day one and you're like, it could be used for flu season or a global pandemic if that, comes to pass. But when did you realize you needed something, and that a lot of the fintech startups, were going to be the first to feel the pain and therefore needed a playbook?
I wish, at inception, I had the foresight to know that the market needed a playbook, but it really came together just through organic conversations with founders. At the onset of COVID-19, I personally felt the market's going to need this. We had a influx and record highs in funding, and the companies seemed to be, sailing high, but I could see that would start to tighten up as we've seen in previous recessions. And to me, it was the opportunity to step back from what I was doing at my prior role at CB Insights and try to help founders figure out how to turn some of the data and insights that I put together on the landscape to drill into what's really going on at the foundation level. I had wanted to just start small, and the more and more I talked to founders, I kept hearing the same pain points and put the framework together, which became the body of what is now work.
Yeah, the framework, this work, the acronym for working business models, operations, R for regulation, C for customers. Did it always start in that order? Which pain were you hearing from founders first?
It depends on when we're talking. So the onset of COVID-19, it was all about operations. What's going on with my team? Let me protect home base and make sure that the team's okay. And then from there, how can I keep my customers informed with what's going on? How are we servicing them? And then along the way, some of those other things started to come to mind as we realized that we were going to be in this, especially in the US, much longer than other markets like China, which were further along in their recovery. So then the regulation came about when you started to think through, what is the opportunity here for fintech and what's really going to be unlocking that? And it's regulators. And it's traditionally been something that's unlocked the market for fintech companies. But in particular, we've seen them acted unlike they had in 2008, where they were a little bit longer in taking action. We saw sort of immediate responses from regulators with, getting together relief packages and working and partnering with fintechs, which I know is something we'll talk about. And then the working business model is what I heard from the venture capitalists. So they're looking at the businesses. Previously, there was, growth at all costs sort of mentality in some of the consumer facing businesses, but immediately it was, let's button down the books and where are we on the path to profitability? So the pendulum had very much shifted in terms of what the market was looking for and where we needed to be as an industry. So, and you could see that, you could start to see that when the businesses had to make tough calls and laying off some of their staff and closing offices, really focusing and tightening the financials. Universally, didn't matter what you had going on in 2020 in terms of the financials, that got thrown out the window.
Well, the archetype for early stage companies and startups is that you have to be nimble, or you don't have another source of revenue to rely on. You may not have as deep pockets and capital. I'm curious just what you saw about how quickly the startup world, the fintech world was adapting versus what you saw kind of outside of that, whether that was traditional financial services or just, kind of the rest of the world that was kind of living in denial for quite a while.
I mean, the banks were forced themselves to be nimble as well. So if you are a bank, right, and you couldn't service your customers because you relied heavily on an in-branch model, which is something I talk about in the customer segment, because banks were hard hit in terms of how they service their customers. They were very nimble in terms of being able to move their staff fully remote, like many other industries, and being able to get online with their customers. And also you have to remember, because it is a global pandemic, a lot of the resources that they used outside of the US, the call centers in India, they were also on a global lockdown. So they really needed to be agile in terms of their responses if they wanted to be in line with, customer service expectations of their customers. And yes, there were long call volumes and call times, but they needed to be very aggressive in starting to vet vendors that might have otherwise not have gotten a chance at a POC, to really think through, like, how can we automate onboarding? Like, how can we integrate chatbots and help us deal with this, unprecedented level of volume?
Yes, in these unprecedented times, I think that brings us to some of the operational aspects, and I think we'll circle back to some of the business model aspects. But operationally, one of my favorite stories from one of our members at Alloy Labs was the phone call that came up where, as people were leaving the building, security called because the order was given. They didn't have enough laptops, and because they'd never contemplated everyone going remote, so people were walking out with their dual monitors and all of that. And security's like, "Is this okay?" And they're like, "Yeah, this is the new plan called get people the resources. And we're going to figure out the rest, along the way."
It's a bit shocking that there was only one company they didn't have a work from home playbook in terms of startups, but it's pretty interesting to hear even incumbents didn't have a contingency plan. That's pretty standard when you think about business continuity planning and business continuity management.
But normally it's about, you have a secondary operations center that is, somewhere else, or in one of the biggest banks. I was having this conversation with their COO, and she was telling me, she's like, we never contemplated that the Philippines and the Dominican Republic would both also be locked down. We thought, by going two different directions, we were covered. And I like another Alloy Labs member who is from Michigan. Their first approach was, well, the closest thing we have to a plan for this is our snow day plan. And we're just going to be longer than we've ever had, a lockdown due to snow in Michigan.
Yeah, this wasn't a snow day. This was an ice age.
Yes, I love it. A nice age. So operationally, let's talk about the fintechs first, and then we can come back on some of the incumbents. What were the biggest impacts operationally, and what do you recommend your central theme as it relates to operations?
Culture. I heard that across the board. Founders felt very disconnected from staff. I mean, they had integrated new tools, and I've recommended a couple in there, but you really just can't replace the osmosis that you get from being together as a startup. And venture capitalists were very, eager to figure out how to bring back that element even in a fully remote environment, because that's one of the most valuable things, even from an early employee at a startup myself. The culture is really what you go for. Like, you want to work with smart people and be around smart people. So not being able to feel that is tricky, but also you've never felt a stronger sense of purpose. Everybody, even though things have been tough, like massive layoffs across industries and people dealing with unemployment in unprecedented way, they were all invigorated to sort of step up. And within operations, I also noted that many were ahead of their product roadmap as a result of being more productive at home, which could also lead to some burnout. Again, the biggest thing being just culture, top of mind.
Well, culture, I do want to push on that. I think part of that might be putting a pretty mask on, being a startup person myself, having done several startups, having been a COO of a startup, I have to raise my hand and say, yeah, what we kind of call culture and collaboration also said we didn't really have good process because we were always fast moving. And so I think lack of process sometimes means we need to be in the same room to hash some stuff out. Now, you do need process, to JP's point around the nimbleness aspect of it, but I can see a lot of startups, that weren't strong in process, feeling that.
Right. Depends on the stage. You get that typically when you're a little bit mid-stage company, where you start to put in a layer between senior leadership, you put a management layer. And this was really an opportunity across industries for managers to step up. And they needed to, be a lot more hands-on with helping keep communications flowing between the top of the house, because they're dealing with, not only the ramifications of being fully remote and what's going on with their customers, but also what's going on at the board level and what's going on from, a macroeconomic level.
Well, and a part of what I was trying to get at too is, in some respects, it was easier to not have a set of procedures and policies, a stack of binders on the shelf,
Sure.
because as a startup, you're always dealing with new things, and you got to figure out how to deal with it. And for many more established organizations, you've got the bureaucracy of people that are used to, well, somebody's figured this out and they're going to tell us what to do, and I'm just going to sit and tight until they do.
Yeah, I really focused this first playbook on founders, recognizing that it's my first product. I need to be hyper focused on who my audience is. So I didn't get to talk to these sort of incumbents as much, but I could agree with having been on the other side of the fence. Yeah, there was always sort of a process, but at the same time, the roll up the sleeves mentality at any organization is always celebrated. Somebody that jumps in and is willing to facilitate things. And this was really a moment for HR professionals to shine, because if there wasn't a playbook for a pandemic, there certainly is one now. And many HR, people probably know way too much about, what building codes have in terms of, the proper ventilation and how they're going to be thinking through contact tracing. So it's been a really cool thing to experience, but I could agree with you there. Like there was no playbook prior to this, and that's kind of why I made it.
Yeah. Well, I think every crisis needs a new playbook, because you never fully anticipate all of this. But having a good plan that you can begin deviating from is a great start. Now, you mentioned the return to work aspect and remote workplace and part of this in GitLab, and have as an angel investment, a company helped scout that they'd gone fully remote 4 years ago. And another one, Blue Leaf, had just gone fully remote 18 months ago, maybe 2 years ago. Do you think that's going to be an increasing trend within fintechs?
It's hard to say at this point, because again, very regulated industry. So there's certain processes that need to be done on site, depending on what you're doing in the financial stack. I could see it being more flexible for companies. There was a few companies that didn't, again, have a work from home, policy. You did as you needed to, but there were certain founders that were really hard-nosed about having everybody in the office all the time. And now they've come around to the fact that it can be done, the job can be done fully remote. And that there should be some flexibility in place. And frankly, now it's sort of ingrained in anybody that's in the workforce today.
We hear this from some of the more progressive banks we work with, that it embraced cloud a lot earlier. That the chief strategy officer of one of them said, we never put into that ROI calculation this idea of being in the cloud. Part of it would be, hey, in case there's a global pandemic, the information resides in a place that can become accessible to everyone anywhere 24/7, and is kind of infinitely scalable from an access point of view. But it turns out that is a pretty good use case. Good use case that we should have gone in. And I think that's one of the places that a lot of the fintechs have an advantage over the incumbents, is that embracing of a lot more of the modern technology in those processes. Probably gave them, a real leg up related to that.
Absolutely. And that was one of the first lines in one of the segments where I called out, literally, no one celebrated the fact that nothing broke. And it's like, hey, like we were put to the test from a capacity perspective and the volumes perspective, if you're trading. Nothing broke. It's an under-celebrated, underrepresented thing. And most sort of were like, it was easy for us to go remote. Wasn't it easy for everybody? I'm like, no, absolutely not. Many people struggled with it.
Yeah. In addition to cloud, it feels like this also puts an increased emphasis on, it seems simple, but the idea of being paperless. You talk about didn't everyone have, an easy time going remote? I remember one conversation with the bank's CEO, and they were talking about they're trying to figure out how to get enough printers for people working from home to be able to print out a lot of the forms as it related to their lending business. It was like, I'd like to raise my hands. Like, maybe now's the time to figure out how you don't have paper in your process. It's like the light bulb went off,
Right.
Another Hello Labs member said, her chairman had said, never waste a good crisis to challenge, what you need to give up on how we operate. And it sounds, not just the fintechs, the incumbents, both needed some of this push to move them along in that direction.
An iteration there on Churchill, actually.
Yeah. So let's come to the R, regulation. So that is one of the challenges.
Big segue, because regulation actually holds some of that physical documentation back. E-sig being the example that I highlighted there, with most mortgages being executed now fully remote and requiring notarization previously physically with a wet stamp was absurd to the startups that have been sort of pushing this boulder up the hill. And the local regulators recognizing that if they wanted to see, the economy be stimulated by home sales, they really needed to unlock this thing. So e-sig has been a huge win, and real estate, has followed.
Yeah. I mean, heaven forbid, this is where we started. It's like, we could never do that. Oh, we have to do that. Oh, I guess it's, okay.
Right.
Let's move that direction. A lot of the startups struggle with regulation in the first place, in this compliance piece and figuring some of it out. Where else are they being challenged now? And how do you think COVID is going to help many of them grow up?
That's a good question. Regulation is pretty top of mind. It's not necessarily that they don't know it's there. They come up against it. I think earlier days, it was recognizing that you needed somebody on site and in-house. And that's what I pitched companies when I was first trying to get out of DTCC, which is, a massive incumbent that clears and settles for the financial markets. I pitched fintech companies that they're going to need somebody in compliance that's frankly read Dodd-Frank, because it's gonna hit them. And at the time, it was like, we're not regulated today, and it's like, well, you will increasingly become regulated as you start to rebundle your services and cross-sell. And I think that could actually probably be something that they will face friction on, is now that you can't talk to your customers and now that your staff is fully remote, what are the next products and processes that you need to start to reprioritize? The product roadmap might have been totally thrown out of whack. And I saw companies accelerate and add new things to the product roadmap, but like, what now doesn't make sense? That's a big question, right? And for startups with limited resources, it's tough to say, like, we were going to make this big investment in X. That might not be applicable anymore. So we have to we also not only have to rethink our financials, but we also have to rethink what we're building.
Well, and as you talk about kind of growing up, Jason, around regulation, one of the insights you did have in your report, Lindsay, was that the pendulum has swung from growth at all costs to getting on a path to profitability. So right. I suspect that may be a part of that too, right? That they had to not just say, hey, we have this really cool concept or this really cool technology. Let's just go sign up as many users and we'll figure out a business model. And along the way, they're going to have to figure out their regulatory compliance too, right?
Absolutely. How are you guys doing this at the Concept Lab?
Well, the Concept Lab, we always started from a slightly different perspective, and the idea of, working with a group of banks to build out this proof of concept, that's the name of the Concept Lab, really always had an emphasis on how do you drive and derive real value out of it, because that's why the banks are interested in partnering with these startups in the first place. So almost baked in from the outset is you're not going to actually get through the Concept Lab if you can't prove that there is something at the end that the bank is willing to pay you for, right? Like we're really trying to close that gap between, hey, you went to YC or the Techstars accelerator, but now, how do you go from we've got one or two leader banks to, we're not mainstream, but, we're getting several banks.
Well, and for many of the startups that are joining the Concept Lab, what they want in a partnership with a financial institution is, hey, can you help us navigate these regulatory waters? We don't want to build up a whole team here. If that's a part of the partnership and the value, you're going to tell us, the rules that we have to follow and the way that we have to do it and document it. That actually creates a lot of value for them on that side.
Yeah, I always agree with that. But when I think about outsized returns and really disrupting the industry, sometimes it's good to come at it from a different perspective. and really build the technology for the problem, for the customers, people that are feeling the pain in the market. And the banks absolutely will help them navigate it if they're the end customer, and you should build for them. But, how do we move the industry forward? And that was one of the biggest focuses for me when I stepped back and said, okay, I've built this framework. What do I really want people to think and take away from this, which is that founders are fighting for their businesses, and fintech has really reached this zeitgeist in the media, but the funding hasn't kept up. And you'll see VCs saying that valuations are out of control right now, but maybe it's an abundance of activity because of the excitement around building things to solve all of the massive problems that have finally come to pass and that have been brought to light here. And I'm very, very bullish on fintech. Always have been, always will be.
Well, and that brings us
more things to be done, right?
Yeah. Well, that brings us actually very neatly to customers. The C in the work is, in the study, what did you find and recommend in talking to founders about the customers?
Be very transparent with what you're doing, what your processes are. When, if there was something that disrupted operations, being forthright with what was going on, customers want to be looped into what's going on, especially in startups when they know that you don't have the full scale of operations. I think a lot of customers also came to founders that they'd had in their pipeline that they were willing to do a POC with, but hadn't moved it forward. If it was solving a short-term problem, a couple of them I referenced, like being fully remote. If you're a bank branch and you need to sort of onboard now all of your customers remotely or give them access to their accounts or switch money over, they became more hungry to adopt things on a different clip than before. So for them, first it froze. Let's protect our existing book of customers, but then you started to see the pipeline really, really open up for companies in certain sectors, of course.
Yeah, you called out, in particular that the challenger banks were ahead of a lot of the incumbents because they had already mastered, the fully online by necessity, right? And the ability to open a new account. But interestingly enough, what we're seeing is the incumbents now enforced, in the same way I said that, a lot of startups use culture and same room to, basically cover over the sins of we don't have process because we haven't needed to invest in it and it's all changing. Banks have used branches for far too long to cover over, hey, we don't have good technology and ways to do this. Just come into the branch because you want to come see us and value that face-to-face communication. But now we're seeing them adopt in absolute, record time. And as you had called out, you see folks like Mantle, that support the incumbents in building a fully online digital account opening process, going out and crushing it. Do you think the incumbents are going to reach parity with the fintech startups? And what are the implications then for the fintechs if one of their primary advantages it had been the fully digital application? Well, now the incumbents have it.
For the incumbents, it's more so about increasing their ability to be efficient. The bank branch model has long proven to be inefficient, but they continue to do it. So I think for them, it's more so bringing their cost structure down and being able to be operational. And I would love to see that being passed through in the form of savings to customers. But frankly, you haven't seen it yet. And the way that banks and fintechs will always be different is in the way that they think through monetization. A bank is going to charge you an overdraft fee or some account maintenance fee or some other fee along the way. And that's structurally what you agree to when you sign up to be a customer there. But fintechs have switched the business model entirely and think through how do we give it away for free and cross-sell.
Well, I want to push back, right? Because under pressure, you've seen a lot of the challenger banks have now introduced a lot more fees, right? Because they're moving from the growth at all costs. N26 and Monzo talking about, under pressure when it's not growth and all about, the vanity metrics of number of accounts opened and things like that, making that model work. It is really hard to build a real business based on interchange alone. So we're seeing more of that.
Yeah.
Not fully, but, there's a interesting catch-22 in that, right? Where, the banks were addicted to overdraft fees, right? And they still are. It's come down, post Dodd-Frank, but they only did it under regulatory pressure because, you go to Wall Street and they look at it and they're like, we really like to see, net income and your net interest margin and, not being, forced to monetize the spread between your cost of deposits and your lending rate. Guess what? Fees have a high amount of margin attached to it.
And Jamie Dimon said, if they keep interest rates at zero, what will they do to offset the losses? they will raise rates.
Well, I mean, the classic struggle, the $64 million question between insurgents and incumbents is always, can the insurgents scale faster than the incumbents can innovate? And when we were in an environment where the incumbents were earning record profits, and we talk a lot about fintech, but we don't really have to pay a lot of attention to it. And this is why I think the customer part of your work model really highlights the difference, because if you've got a baked-in base of hundreds of thousands or millions of customers, you can kind of hide that bleeding pretty easily. You can't do that as well in an early stage company. And since the COVID, the traditional financial institutions have seen a pretty big increase in deposits, and they're still seeing it.
Yep.
And they're citing that as a flight to quality, which in their minds means just about any bank or credit union is better than just about any fintech. And I don't think that that's going to prove to be true. But I'm curious, as you were doing your research, did you see anything around customer preference has that changed to where they want to do their financial services and where they want to, who they want to trust with their money?
It's an important point to note that most fintech companies can't take deposits because they're not FDIC.
Right.
So by default,
Right.
banks have them. So it's like that data that's in there is
But if I'm a bank, I still round that in my favor.
It's a different business model. So it's tricky to sort of compare, but you did not see a flight out of fintech, and in certain regards in brokerage accounts, you saw record account openings, but you also saw it where the fees were zero, again, because that's how the brokerages have learned. Like Robinhood has brought us down to zero, and that's where we need to be as an industry if we are going to survive this. And they saw record account openings as a result of it. So across the board, Robinhood is still, the preference among millennial traders and younger people that, prefer that experience. But if you want to compete, the business model has been put under pressure and customers are savvy.
Yeah. It's funny. It takes pressure, maybe not just the Churchill comment around crisis that was repeated by Julie's chairperson, but the crisis caused by someone coming in with a disruptive business model, even if it might not be fully sustainable, or they poke at that $64 million benefit that you've been taking advantage of, and it forces you into that. Oh, maybe it's time to reassess. Now, is your thinking about the what's next? What's going to be the next report or area you want to probe into beyond work?
I had to put my pencil down on this one because I've always had a tendency to want to build massive 100-page decks and keep going, and I wanted to give it an opportunity to breathe and let the market tell me where I should spend more time. And thus far it's been what's going on. Now that the seed market's picking back up, where are companies still seeing engagement? And for me, thinking through how do I make this evergreen? And at the end, I sort of highlight what I'm thinking will be the next pandemic, because it won't be a healthcare crisis, won't be a financial crisis. Can't say for sure, but again, it's the things that you're not thinking through that blindside you. And I don't want founders to be blindsided again. Data security and the cybersecurity awareness has never been more acute, but also the environment now with SF's Orange Sky moment this week, people are really understanding the severity of climate change.
We're getting that way all the way up here in Seattle even this weekend.
And that's going to be a huge unlock for ESG companies that I've been tooting the horn about for a couple of years now, because it's a passion category for me, but it's unavoidable at this point, and people really need to start to focus on it. So for me, the next thing is continuing to see where are their early market signals and where's the pain, and help solve it.
Exactly. So if people want to download the Pandemic Playbook to get a leg up on how you thought about this in your collection of great work, where can they go find that?
They can email me at lindsay@caliberadvisors.com, or they can go to calibercorporateadvisors.com/intelligence. I believe we'll put a link into the show notes for this, but also please just reach out to me on Twitter, DM me. It's probably the simplest, fastest way. LC Davis 1225.
Awesome. Well, thanks for taking the time to explain how you think about work.
Thank you.
Oh, great. So You were one of the first innovation leaders across several of the largest players in financial services, including being Citi's first chief innovation officer. And you rolled all of that up into a great book, now available on paperback for those who like to still feel the paper for their pandemic reading. The Changemakers Playbook: How to Succeed and Scale Innovation in Any Company. If you need to say quiet or anything, we're just going to cut this out.
Yeah, cut it out.
Okay.
Yeah.
I couldn't hear anything. Okay. So one of the parts of the book that I just absolutely loved is you talk about how do you plan when you can't plan? And I think a lot of financial institutions are just feeling completely paralyzed by the uncertainty right now. So first, what's your take on the current operating environment for financial services?
Yeah, I mean, I think people are a little paralyzed because they're hoping for answers from the traditional sources. And clearly, traditionally, especially this time of year, if you're on a calendar fiscal year, which most banks are, you're working on your 2021 plan. And what do we like to do? We like to go back and look back at the numbers and say, okay, how do we roll forward? And you get that neat upward sloping curve of growth. That's not possible this year, right? And so I think the people who are getting past that are focusing on listening to their customers and understanding at a very deep level how they provide value. And if you keep listening and stay focused on how you provide value, you're going to understand how the path forward is. If you keep looking backward into your numbers and try to project some magical spreadsheet, you're going to be stuck.
Well, in the time of COVID especially, right, that if you look back at your 2020 numbers, it's going to take you in a false direction because for most bank, it was actually record numbers, in terms of the mortgage business has been going off the hook thanks to the payroll protection program. At least in the United States, banks generated a huge amount of net income. Most of the banks we talk to are seeing record growth. Most of the fintech startups that are in a similar fashion, looking at plotting, what did this year look like them? Well, adoption of digital technologies saw record growth, but it feels a little bit like if you were to extend that line or curve, we know just anecdotally looking around our environment, that might not be so sustainable. So what's your first rule when you begin to get to the customer? Because, even the customer can be a little bit misleading. How do you start to unpack what that future should look like?
I think you've got to act upon what you see customers doing, not just what they're saying, and be out there with small tests and experiments that help you open up the door to potential paths forward. And by the way, I'm not so convinced it's going to turn out to be a stellar year, especially banks servicing who have big consumer loan books, for example. I hear concern that issues may be masked by the payroll protection program, yes, and that with those subsidies gone, there's an anticipated spike in delinquencies. So there's a lot of uncertainty, but I think it's a matter of building out a very robust portfolio of experiments and tests where you're trying out different hypotheses about where your future opportunities may be lie, and then you're going to be ready because we really don't know. So you've got to create options for yourselves.
Now, one of the things that you tease out in the book is this idea of reimagining the board agenda. And what you just described is not your typical board discussion, or at least not the ones that I've sat in. And I've sat in on a lot of board discussions where words such as uncertainty and tests and this lack of visibility, the idea that underlying problems might be masked and we just don't know. So how do you think that financial institutions across the board should be reimagining what that board agenda looks like?
Yeah, and I think that's an excellent question. And look, boards are focused on some really important topics when it comes to the whole innovation agenda, right? They're thinking about technology investment, cybersecurity, what are the risks of being on the cloud? I don't think there's enough discussion in many boardrooms about the consumer. And is there, a real understanding of what is going on for the consumers who drive a lot of the value created by the banking system? And I don't know that they need to be in my view, more upfront about understanding that, against a traditional view of how you run a business and manage risk, innovation does look kind of messy, right? It's almost scary. We love it, but it's very polarizing. You've got to set that aside and say, you know what, you can't do new what's with old hows, is something I like to say. And when you're measuring innovation against the old hows and the old metrics and the old expectations, you may be setting yourself down a bad path. But if you say, no, this is really different, it needs to be managed differently, it's got a discipline all its own. And again, I go back to the key is managing your, building an innovation portfolio where you may have different, it's no different than an investment portfolio, right? What's the key to effective investing? Diversification. You build an effective investment portfolio that's linked to your strategy, that's focused on the customers with whom you really see your future and are constantly testing out hypotheses with discipline of possible outcomes. You will have winners in that portfolio.
Now, you bring up the problem of metrics, and this poses a challenge again and again with innovation. I'm curious if you can go back to tell some stories of, being the first of a chief innovation officer, the discussion that the metrics were all wrong, that we can't use the traditional CapEx and OpEx models and ROI when we talk about innovation. Did everyone just look at you like you had two heads, and how'd you overcome that?
Well, sure. And one of the stories I share that I can laugh at now, but it didn't feel funny at the time, was in one of my roles, my team would produce business cases projecting potential value to different innovations we were working on, and we would take them to CFO, who would automatically slice all our numbers in half.
Yes. Well, and, having been an entrepreneur and pitching venture capitalists, it automatically becomes, so should I be doubling my numbers so that when you slice them in half, they're realistic, but then you're going to say I was wrong? Or do I present the numbers as I believe them to be with my best possible guess, only to have you slice them in half and say there's no way we're going to invest in you because this will never be profitable?
Right. And it's sort of, and I don't like to play those games. I'm from Brooklyn. I'm the middle of 5 kids. So I'm, at the end of the day, very down to earth pragmatist. And I want my data to always have integrity. So the problem is when you've got a nascent idea, and so new by definition means not proven, you can't, and you try to impose too much precision on it early on, you're invariably going to be wrong. And so I'll tell you what we used to do. And part of this takes, you need to have, if your CEO is on board, and ideally your CFO is on board, you can have discussions that sound like, what I used to do. One of my favorite practices is don't try to project, that 5-year P&L with the discounted cash flows, in 4 decimal places. It's ridiculous. Start by looking at, well, here's my hypothesis, and here's what I believe the addressable market size to be. And here's what I believe the primary drivers of revenues and expenses will be. And here's what I have to invest. And based on all these, here's what I believe. If I got 1% market share, which is not easy to get, as you probably know as a founder, what would that look like? Is it worth continuing on? So if you're able to have these very open dialogues about what do you believe and what would it take, and then how do you feel about it, you can manage towards milestones that leads you hopefully to more and more data, so you do eventually develop a more precise understanding. I think the problem is when people come up with a new concept, have some qualitative insights, and they build a 5-year P&L around that. That's just a waste of time. You're better off taking that time and going out and doing some, build a beta prototype and try it with a few dozen people and see what happens. And, that's a much better use of your time at that stage than creating a false sense of comfort through projections that look good because they're on a spreadsheet, but they really have no meaning.
Yes. Just because you put them in Excel does not give them validity. I had in the early 2000s in one of my first innovation roles within a public company rather than as a startup, I had the conversation with the CEO that you're asking me to lie. And he's like, Jason, I would never ask you to lie. What am I asking you to lie about? I'm like, I have no idea what the telecom costs are going to be in year 5 related to this new product we're trying to launch. I have no idea what they're going to be in year 1. They can't be significant though, but why are you asking me to, go fill those out? And I
Yeah.
love how, you articulate that, but institutionally, that's a very hard habit, to break and to say there is a secondary standard. Do you think the innovation groups as a result need to be treated, completely independently, or how do you make innovation part of the mainstream?
Right. So I was always a big proponent of you have to find a way to stay linked to the mothership. And I think you can see now there are definitely published data, and people are taking a look at these hundreds of geographically separated innovation labs, companies that went and pitched a tent in Silicon Valley or some other tech center around the world, because if they built their innovation lab close to home, it would get smothered. But if you've got a big brand and a big customer franchise, like we had at Citi, where I first served as Chief Innovation Officer, there would be tremendous loss of value creation opportunity if we went off. I mean, we had one of the most powerful, most attractive, most well-known financial services brands in the world. So, and an incredible base of talent in the organization, many of whom wanted to be involved in supporting innovation, but weren't empowered, weren't asked, didn't have the skills, and were in, oftentimes in roles where they were measured against their ability to protect the organization from risk. So when you define risk in terms of things that look different, things that don't come in according to our metrics, of course, you're going to have a lot of things, potentially great ideas defeated. So you've got to, and that's why there's such an important need for a new house. But I think it's a real loss when organizations don't tap into the talent that they have.
Yeah, making up a new phrase here, it sounds like you end up with the innovationally disenfranchised at this point, when you don't tap into the talent and you see that innovation kind of going elsewhere.
And that's really demoralizing to the organization, because people who have a career runway and aspire to have, any kind of career in front of them, most people get it. They see the need to change. They see how technology is impacting their own lives. They want to support what's going on. But again, they may not have the skills. They may not have the authority. They don't have license in their roles. And so and this was one of the challenges of being a chief innovation officer, people always ask me, is that a good idea? And, the positive is that it's a signal to the organization that management cares. You have somebody in the C-suite with that role. So clearly, wow, this is important. That's really good. The downside is people say, oh, those guys are taking care of it, which leads to some people feel disenfranchised and some people feel, oh, not my problem. But really, you need the whole organization ultimately to engage, because you want to tap into the customer databases, the infrastructure, the support functions. You want to tap into all that knowledge and capability to help you. So you want people to feel on board.
Yeah. So how do you go about building a culture like that when, our entire, system, from schools to how we process loans and going into the branches now go through the drive-through, and things that we said we could never do work from home. Well, guess what, everyone? Go work from home. Take your computer and, monitor with you, since we didn't have the foresight to give you a laptop. How do you go about building that kind of innovation culture in the midst of such chaos?
Well, there's nothing like a crisis. As Winston Churchill said, it forces you to think creatively. And you're right, we're doing things now that we never thought we would do before. I mean, I sit on the board of the AICPA, the Global Accounting Society. They moved the CPA exam online in the space of 4 weeks. And you can imagine how rigorous that exam is, how important security protections around it. I mean, that's a very serious exam, and a very hard-earned credential. People are doing things they never thought they could do before. I think culture, there are a couple of things. One is metrics. People, what gets measured gets done. And you have to look at the incentives in the organization and say, what are people being incented to do? And what are they being incented not to do? one of the things people are strongly incented not to do is fail, right? And I think, being able to truly, not in a lip service way, but truly and with a whole heart view failure as learning and embrace the fact that innovation means you have to experiment, and experimentation, as any science student would know, means that sometimes your experiments aren't going to work out.
It's funny, the course I was actually just teaching for one of the graduate schools of business, part of the methodology we developed at Fintech Forge, it's called Fast, Iterative, Responsive Experiments. But that last E comes out of an argument with my, at the time, teenage niece who was learning the scientific method. And like a lot of teenagers, she does not like to be wrong, which led to, why can't I just design an experiment that I already know the answer to?
That's kind of self-defeating.
Well, but in a world where we don't want to fail, right? Like, there's a great Seth Godin quote around, there's a world of risky exploration and there's a world of safety and certainty. You just can't expect the two to intersect. Pick one or the other in what you want to do. And so your loan portfolio, you probably want safety and certainty. But if you apply those same metrics to your innovation portfolio, you're probably getting the wrong results.
Also in a loan portfolio, as I know, since I spent most of my corporate career in the credit card space, if you don't take risk, you're not going to get any return.
Yes.
So I think that's
risks.
Kind of the conundrum that, it's inherently a business where achieving the financial goals you want to achieve mean you're going to take risk. The other thing, getting back to culture, that I've been thinking about a lot is, we focus a lot about, we want to be more innovative, so we have to bring in these people who are great at innovation. I think I've never been in an executive meeting or spoken to a leader who didn't also say, but we need to keep people out who are not able to embrace the values that are required to foster a culture of innovation.
And what would some of those values be? Sorry, like that is so spot on. Like, I'd love to know what you think that short list is for a bank trying to do this or a fintech.
I think collaboration is critical. Respecting and really embracing diversity of thought. Optimism. I think, all the companies that I've worked for and the companies I consult with now and advise, they're very thoughtful about screening new employees. And everybody screens for certain leadership competencies, the soft skills that I think are really the hard skills, but to really think in a focused way about, what attributes don't I want because they are innovation killers, and not let your desire to, hire the person who's a great functional expert, but they're really a jerk when it comes to collaboration. How many people are able to stop themselves from doing that? And so I think you can't just think about who you bring in, but who you don't want to let through the door because they are not going to help feed that culture.
Now, is that different for fintechs? Is something that leaps to mind that, we think of the fintechs as the cool kids that do this, but Silicon Valley has its own reputation about being bad around some of these cultural elements around collaboration, for one, the cult of the founder, in terms of you're either all on board or you're not all on board. Should there be a difference in the way a fintech startup approaches innovation in the cultural innovation versus how a bank does?
Yeah, well, first of all, I think that startups and big companies have more in common and more to learn from each other than they like to admit. And so that they have more common ground than we might see. I think whether you're a founder or a corporate executive, you have to think about what's my vision and strategy, what's my purpose, and therefore what are the skills and competencies and leadership traits that I want in my organization, and hire for those. And I still think being a collaborator, being able to seek out and understand and respect diverse opinions is important, because and even more important for a founder in some ways, because look, startups don't have a lot of resources. I think, but you have to solve many, many, many tough problems, and you're racing against a clock, right? Because the cash is burning.
Yep.
one of your greatest untapped assets is if you have a good network and are able to tap into people to help you find answers because you're really willing to listen and because you embrace different viewpoints, that is a way to solve really tough problems quickly and in a highly resourceful way. I think this myth of the lone wolf innovator is just that. It's a myth. I think around great founders, you will find great teams.
Well, and I think, that is make sure I'm counting them right, the third S in the title of your book, right? Really is, if you're really looking to not just seek and seed, but scale innovation, you need that team, and that team to function and be innovative, in its own right, not just around the idea.
And the team will evolve because the team that got you started in the early stages is going to have to expand significantly. And I don't just mean in terms of the number of bodies. I mean in terms of the skills and the outlooks. I mean what it takes to run a robust business at scale, particularly in banking, where there's not a lot of tolerance for error, because you'll have the regulators knocking on your door. That's a very different set of requirements and skills than the early stage when you're noodling around with a prototype offline.
Yeah, a prototype that succeeds 80% of the time, and having, the fortitude to say that's good enough, let's go to market to test it, is one set of skills and character. It's another one entirely when we say, your ACH gets there about 80% of the time. It's good enough.
Oh, yeah. I mean, we were testing at Citi a number of years ago a device that looked like a credit card, but it actually had RFID technology sandwiched between two pieces of plastic, and you actually could load multiple accounts onto this device, but it worked at the point of sale. It was fascinating. We called it the thin wallet. That was the code name. And this was pre, everything in your iPhone, yep. Right? But the device was about 98% accurate, at 98% successful. Well, that was not good enough because you know what? Credit cards are like 99.99999% accurate. And that, that little bit of a difference actually really matters.
Yeah, had it been a little closer to EMV rolling out where everything broke anyway, you would have been spot on.
Guess so, yeah.
As we wrap this up, what's the one piece of advice you would give leaders, whether in banking and fintech, as they're facing, it's strategy and planning and budgeting season towards an uncertain 2021? What piece of advice would you give them?
To me, it all comes back to you've got to listen to your customers to learn what their current and evolving needs are. And I think data is great. I think in today's world, we've been overtaken sometimes by the belief that data, the answer is always in the data. I think empathy and understanding how emotional money is in people's lives, whether you're a business owner or, a mom who's got to, buy groceries and take care of her kids. The emotional component is very real. So I think you've got to listen to your customers to learn and understand the emotion and how that translates into impacts to your business as well.
So great. So the Changemakers Playbook is available, no surprise, at Amazon in all of your favorite hardcover, ebook, audio formats, and now in paperback for those who still like to feel that paper between their hands. Thanks for joining us, Amy.
Thank you so much.
That's it for this week. If you like the show, make sure to give us a 5-star rating on your favorite podcast platform, or share it with a friend, or share it on social media.
We'll see you again next week with more Breaking Banks.